regarding the significance, wherein, like I told you, it is just one set of books of accounts which is issued by the companies, right? But the thing is like there are so many end users and they have their own objectives, right? And they will be interpreting the same data in different way from their own point of view, from their objective point of view, right? So that was the thing mentioned in this slide, and let us now continue and let us understand the importance to the various users. Number one, management. Management is always interested to know about its efficiency and inefficiency. The basic objective of the management is to judge the efficiency and the performance of the company so that their appointment may be renewed, right? That is their objective. And its objective is to review how effectively the capital is used, how well the credit standards are observed, whether capitalization is fair or not. Being a part of the management, like one has to think about all these issues, right? But the important part, like why are they interested, right? So basically to judge the efficiency so that their appointment may be renewed, so that they are allowed to continue in the same company. Okay. Next is the significance for shareholders and the potential investors of analysis. This point has been discussed earlier. Shareholders and the potential investors are interested to know the return and the solvency position as well, the safety of the funds. Investors include the equity shareholders, the preference shareholders, and the prospective shareholders, right? They are not only interested in the safety of their capital, but they're also interested in the appreciation of their capital. Being a shareholder, I would like to see one of my main objective is like to see the wealth maximization. If I have invested 1 lakh today, so within some time or maybe within some years, I would like to see it as 1.5 or 2 lakhs, right? So that is what is the appreciation of their capital. That is also one of the objective of these investors. Okay, and they would also like to know the profitability of the company. In other words, investors and shareholders analyze the profitability. This is one area where they are interested, and second is the long-term solvency also. Okay, wherever or in whichever company, if I'm investing the money into the shares, so I would like to see that whether the company will be able to, like the long-term solvency. Okay, no doubt the shares are not redeemable, but buyback of shares is there. If the articles so provide, preference shares are there, so they are also a redeemable part, right? We have one kind of preference shares though which are redeemable. So point is, apart from profitability, shareholders are also interested in knowing the long-term solvency of the business concern. They intend to know about the financial soundness. The financial soundness and the operating performance. Solvency की बात करते हैं तो financial soundness की बात आएगी. Profitability की बात करेंगे तो operating performance will come over there, right? So they intend to know about the financial soundness and operating performance of the company so that they can decide whether they should continue, right, buy the shares of other company where the prospects are better. Investors का तो काम ही ये होता है ना कि like they just always look for the prospects from where like they can have the better returns. If as an investor I just remain with the company whether the company is performing or not, okay, in that case like I'm not a good investor. I should always look for the company's annual reports. I should analyze it properly. Like I should be able to analyze I should be able to focus about the future, right? I should be able to, if I'm investing the amount in the company's shares, I need to look after all these areas. And once I find that case company has been doing good, company has received some good contracts and all, future is safe, like company is going to earn some good profits in the future, yes, then I should continue with the company. But if I just find the other way, in that case I should sell off the shares of that company, dispose of, and then try to look for some better prospects. Next, creditors or suppliers. Short-term solvency, right, is the area they are interested to look for. Let us go through this. Creditors are mainly interested in short-term solvency of the company. They are also interested in the profitability because profit is viewed as a main source of payment of amount due to them. Apart from short-term solvency, the creditors will also look for the profitability. The reason is very clear. If the company has been earning some good profit, then yes, they will be able to clear their debts. On the basis of short-term solvency, they decide whether they should allow credit to an enterprise or not. If they just find that, like if I talk about the ratios, chapter number 4, okay, wherein like we have current ratio, we have liquid ratio, the ideal ratio is there like 2:1. So whatever the short-term liabilities are there, which are to be paid by you, okay, so compared to that, your current assets should be at least double than that. For example, if current liability is 1 lakh, current assets should be 2 lakh, should be. If that position is found, if that ideal ratio has been maintained by the company, then creditors will not mind supplying the goods to those companies because they are sure that they will be getting their payments. Okay, and yes, based on that short-term solvency position itself, they will decide that whether they should continue supplying the goods to the company or not. Next, significance for financial institutions. They are the lenders. Okay, from the lenders' point of view, like I already told you that they are basically interested in the short term as well as in the long term solvency position. Short term from the interest point of view and long term from the repayment of the funds point of view. Let us go through this. Institutions which provide loan to the industries such as banks and the insurance companies are interested to know about the profit earning capacity of the business and its long term solvency, both the things. They want to know the present position and the future prospects of the concern. Bankers and lenders of the money in the form of the debentures are interested in the regularity of the interest payment in the short run and repayment of loan in the long run. Government has to go for the various areas, okay, like income tax, sales tax, excise duty and all. Okay, on the basis of analysis of financial statements, the government can determine their own tax policy, import export policy, industry policy and etc. based on the analysis of the financial statements only. Employees and trade unions we have discussed, because I told you like this has been a 1 marker question in the boards like 2 years back also. Employees can judge the profitability of the business enterprise on the basis of the analysis, okay, and they also want to know how much bonus and increase in their wages is possible. Financial analyst helps the trade union in negotiating the wages agreements. If they just find that the company has been doing good, company has been earning some good profits on regular basis, then yes, they would like to negotiate with their payments. Customers, the debtors, I told you, they also are interested, okay, just to ensure that the firm will continue its operations or not. If not, then they will have to find out, right, any other concern which can supply goods to them. Customers are also interested in analysis of financial statements, as they are interested in the continuance of supply of goods from the business entity on regular basis. This is possible only when the firm remains a profitable venture. Yes, this is quite obvious that if the company has been earning some good profit, then there is no problem to the company to continue its operations. Tax authorities, collection of various taxes. Now GST, right? Every now and then there has been some other news, like if you have been going through, the collection of this GST department has been increasing day by day. So somewhere like people have realized the business people hai, like especially, right, so they need to pay the taxes to the government, and yes, they are helping one other the way to the government, like because they are increasing the revenues, and maybe in future we may find some good policies coming up for we people when you will be into the business and all. They are interested in the growth of the business entities so that they may collect the desired amount of taxes in the future. Significance to regulatory authorities. Okay, for companies like we have SEBI, Securities and Exchange Board of India. So even those people are also interested, right, to analyze the financial position of the company, right? Let us go through this. Regulatory authorities like SEBI, company law boards, stock exchange would like to ensure that financial statements basically are prepared in conformity with the laws of the nation, and they have been prepared to safeguard the interests of the various users. Next, some other parties are also interested in analysis of the financial statements from their own point of view as research institutions, newspapers, economists, etc. So that they can give their own views and publish in the newspapers, and accordingly the public will take their own actions. Now the last topic of the chapter is limitations. First one, limitations of financial statements. I'm sure like you remember something of this. Financial statements also has its own limitations because of the various concepts that are followed. No doubt we need to follow, but concepts also has its own limitations. Analysis is directly based upon the financial statements, and whatever limitations we were facing for the preparation of the financial statements, those automatically apply to the analysis also, like incomplete information at times, different accounting policies, qualitative factors. We know like qualitative factors are ignored. Accounting policies may be different, right? I'm following some different accounting policy and some other companies following some other policy, and maybe like I just keep on changing the policy every time. So these are the problems which are there applicable to financial statements. So accordingly, from the analysis point of view also, the same limitations are there. Affected by window dressing.
Window dressing means that the incorrect information has been shown in the financial statements, like revenue capital has been shown as revenue items have been shown as capital items,
And vice versa.
profit is shown more
Yes,
or
profit
less.
is shown more by undervaluing or overvaluing the stock. Like these things are there. Yes, window dressing is something like manipulating the data, the information in the books of accounts. It's very very correct. Undervaluation or overvaluation of the profits can be there with the help of the stock, with the help of the depreciation, overcharge, or it may be related to some revenue expenditure shown as capital expenditure, or vice versa. Anything. Okay, that is what is window dressing. Let us go through this. Some business concern use window dressing for their financial statements to show better financial position on the date of the final accounts. Okay, it happens practically also, because as a company, when I just as a management, when I just realize that कि like इस साल का profit थोड़ा कम है, and अगर मैं dividend declare नहीं कर पा रहा, if I'm not able to declare the dividend, and if I'm not reflecting the good financial position of the company, in that case there may be some disinvestments in the shares of my company. Okay, so just to avoid that scenario, what I want is that I just prepare my books of accounts in such a way that it looks good to everybody, and everybody who saw the present investors are there, they just remain with us, right? So the window dressing is something like I would like to show what I want you to show. Actually, I will be showing you the results what I want you to show, not the actual figures, right? That is window dressing. So yes, this is also one of the example given. They may not enter, like, okay, in the books the purchases made at the end of the accounting year, or may overvalue the closing stock. This is very common example for window dressing. Okay, and this also can be done by many of the companies. Maybe towards the end of the year, maybe the last week of March, what are the purchases are done, they don't enter in the books of accounts because they already have realized कि खर्चा बहुत ज़्यादा हो चुका है. अगर purchase वगैरह show करेंगे तो our debit balances, like the losses and expenses, will be more, so we won't be able to show some good profits. So avoid that part. Okay, so that can be done. That is what is all about window dressing. In such cases, the results obtained by the financial statement analysis will be misleading. We don't know like what is the actual scenario, right? So because the books of accounts are affected by the window dressing, even if I do the analysis, so that analysis will not be proper, right? Maybe misleading at times. Next, unreliable comparison. Comparison will not be proper because of the change in the policies. Financial statements reflect the accounting policies, and these keep on changing sometimes. So because of that, different concerns, right? Also like how different accounting policies, which I told you earlier, the limitations of the accounting concepts. Okay, so if different companies have different accounting policies, in that if I just have the comparison as an analyst, right, so that comparison will not be reliable. Difficulty in forecasting. When you talk about accounting, accounting is a record of the past events. Like इस साल जो हो चुका है उसका record कर रहे हैं, correct? So past is never going to help you for the forecasting, the values which are there in the books of accounts. That's a problem. So financial statements disclose the data which is basically historical in nature. Okay, that is, it tells us what has happened in the past. So these statements do not give the future projections. Since continuous changes take place in the demand of the product, the trade policies, the position of competition, etc., but no estimate based on the analysis of historical data can be made for future. Next, lack of qualitative analysis. We all know that key. When you talk about accountancy, it talks about the quantitative data only. Qualitative aspects are totally ignored. Records those transaction events which can be expressed in terms of money, we know that, but there are many factors which are qualitative in nature and cannot be expressed in monetary terms, and these non-monetary factors do not find any place in the financial statements, such as, though like it's very important from the company's point of view, like you talk about the reputation, okay, you talk about the cordial relation between the labor management and the labor, efficiency of management not measurable, satisfaction of customers, advertisement policy, etc., even though they materially affect the profitability of the business. All these factors are very, very important because it is not measurable in terms of money. That's a limitation, right, from the accounting point of view. Next, limited use of single years analysis. And though like I have discussed with you in the horizontal and vertical, horizontal we have more than 1 year's data, vertical we have just 1 year data. So because we have just 1 year data, that is not of much in use practically also. The analysis of financial statements assume significance only when they are compared with the data of the previous years. What is the percentage of the cost of goods sold to my sales this year? That will not help me to conclude anything if I don't compare it with the previous year or previous years. Okay, so that is why limited use of single years analysis. Net profit to sales is 13%. Okay, so whether this conclusion is satisfactory or not will depend upon the conclusion of the previous year. So basically we need to have the comparison. If comparison is not there, the data is of no much use to the analyst. Okay, you have been given the comparison. Last year it was 11%, now it is 13%. So then we can just conclude that this year we are earning better than the last year. Do not reflect the price level changes, the historical cost concept, right? The recording in financial statement is done on the basis of the actual cost, whereas the value of money goes on changing. So as such, the comparison of the previous year figures with the current year figures may be misleading, right? Necessary adjustments must be made, but these are not made from the accounting point of view. Effect of personal ability and biasness of the analyst. Any conclusion can be drawn from these data, any conclusion. So conclusions are basically influenced to a certain extent by the personal judgment of the analyst. This one is really important for return on capital employed. This is, I think, like the 15th ratio in the chapter ratio analysis, the last ratio that we are going to learn. Over here, we do have profits before interest and tax. We need to have this profit. The point is now, one analyst may treat profit after taxes, but the profit before interest and taxes की जगह पर what the person has done, profit after tax लेके बैठा हुआ है. Okay, whereas the other analyst may treat the profits before taxes. ये वाला लिया. Suppose मोहन ने ये लिया जो सही है, सोहन ने profit after tax लिया जो गलत है. So it may happen. अब यहाँ पर बात करूँगा तो profit ज़्यादा आएगा, यहाँ पर बात करूँगा तो profit कम आएगा because taxes has already been reduced. So the same percentage, the same ratio is showing two different percentages, right? So this is what is the limitation of the, again, from the analysis point of view, correct? We have net profit ratio as well. In net profit ratio, we have been asked to calculate two ratios. One is net profit before tax and one is net profit after tax. Okay, so this has been very, very compulsory now for all the companies to calculate the ratios as per these two values, so that whenever any analyst is analyzing anything, so that particular part has to be taken. Net profit ratio, now everybody knows कि net profit ratio तो बताओ कि before tax है कि after tax है. पहले ये नहीं होता था. This was a limitation, but now the things are fine. Okay, so this chapter gets over.